What's up, everybody? This is Jimmy with Trading Decoded. It is June 5th, 2024, and it is 4:20 in the afternoon. I already recorded this video once, except I never hit record, so I'm having to redo it, which is annoying as hell. So that sucks for me, nobody else. But the good news is you get an all-time high, she gets an all-time high, he gets an all-time high, everybody gets all-time highs today. And with that comes the common and not very unique feeling that it can't go higher. We've all fallen victim to that. I am sure of it. I felt that way for a long time in times past, and I watch people every day feel that way currently, and it sucks. It's a very difficult thing to get past. But the reason that it exists, usually, and it was this case for me, and it is this case for many other people, is because on the surface, you can't justify or understand why the market is going up so much. Okay? You feel the crunch at home of money. This is not just you. This is happening to the majority of the people in this country. Inflation's high. We see it in our groceries. We see it in everything. We're feeling the pain of it. We're racking up credit card debt. We're having a hard time paying our bills. We're having a hard time feeding our families and all of these things. Yet the stock market and everything in it seems to be doing explosively well. And it's hard to disassociate the combination between Wall Street and Main Street. And I don't even know how to explain it in a way that would make it easier for you to accept. You just got to understand that they're two completely different entities, and one has absolutely nothing to do with the other, unfortunately. They have a lot of money. They've got a lot of money sitting on the sidelines, and they're playing momentum. If the market is moving up, it doesn't matter what is going on in our day-to-day lives. They will deploy more capital. They will push and push and push until there's nobody else buying anything, and then they will take their profits, and we will see a pullback. We don't know when that is, how big the pullback will be, what will trigger it, when to, you can't worry about it. You just got to trade what the chart is giving you, okay? If you're day trading, NVDA is splitting tomorrow. NVDA hit all-time highs today, and once it got through that $1,200 price point, it just continued up another $22, $23. It was pretty crazy, but it stuck at that $1,200 price for quite some time. In fact, we were waiting for that break, expecting it to start to take off to the upside after that. In fact, it literally happened 1 minute after I left for lunch today. But back to the beginning of the day. I started my charting at 7:30 this morning because I had an award ceremony or graduation for my twins today. I wasn't going to be there for the open, and my lines, at least in pre-market, probably weren't going to be very accurate because I did them an hour before I normally do them. I normally do them at 8:30, and they hold pretty well until open. But today I was 2 hours before open. So when you see the chart today, if the pre-market lines look a little bit off, that's why. Also, during that time, when I am sitting down with my coffee at 8:30 in the morning on every other day, charting my lines, I'm developing a relationship with the chart. I feel like there's a connection there. And this sounds weird, I'm sure. But if I am not there for my normal routine and I miss the open or I miss a big move one way or the other when I'm not around because of prior life obligations, when I come back to the chart, I feel off. I feel like either not taking any trades or I get frustrated about what I missed at a time that I would normally be there taking advantage of trades or whatever the case is. And the problem is, if you choose not to trade, that's the better of the two options, in my opinion. But if you choose to trade and you're frustrated because you missed great moves, you're more likely to force trades. And the first two trades I took today were based on logical explanation and reasoning, but probably a little bit more aggressive than I normally would have taken. With that said, let's go ahead, launch the charts, and see what we got going on. So, pre-market lines, we had a decent range in pre-market of 529.26 to 530.01. I say decent, it's a little bit less than 80 cents of a range. And we were in it up until we got out of it. Now, I left the house right around 7:45 this morning. We broke out of it, created what would have been my pre-market high line if I was doing this at my normal time up here. That probably would have been the only thing that I would have changed in my charting, to be honest with you. Then we had our targets high and our targets low. Yesterday's high of day was here at 529.15. We were opening above it, which means we have a gap to the downside. We watch for gap fills all the time. Now, there's no call put scenario here because when I was at my kids' school, there is absolutely zero cell service, so I couldn't add them 5 minutes before open. They would have been right here at 530.83. If we close above that, we'd be hoping to make it up to 531.05, our first target high, leaving you very little room for at least a 20-cent move. So it probably wouldn't have been worth even attempting calls there. However, the put line, I'd be looking for not only a break of this support, but of this support. That brings us too close to our first target low and our second target low. The only place I would have felt comfortable risking puts at this point is if we breach this line of support, hoping to get down to the blue one. Now, again, it's not a huge move between those lines, about 25 cents. That's close to the minimum that we're looking for in order to take any trade, period. You would hope that Qs are breaking support levels and that ADD was doing what ADD was doing. This would have given me confidence for puts because of the aggressiveness that was the drop in what was probably small caps, because Qs didn't drop that hard, which means the rest of the market was. Okay? Now, again, I was not here for any of this move to the downside. We did ultimately get down and close the gap. So congrats to anybody who played the gap fill. Then I came back, got on the mic, and as we were trending down, we were looking for a reason to either get into calls or get into puts. Calls at this moment was a counter trend trade, at least until we were able to break this trend line. But what was also happening for the people who were interested in buying puts, or what should you be thinking about when you're interested in buying puts on a pullback? Are we moving up to resistance coming off of higher lows, or is it just one move up to resistance that we're looking to take back down? And this should be red. And the answer is the opposite of what you think. Now, for me, in my observations, in my own trading, when we are coming off higher lows, the resistance that you're looking to buy at is more likely to fail in holding than to succeed in holding. Okay? Sorry, I'm a little congested, guys. So if you're looking to take calls, because at this time, guess what was also happening? Qs bounced, started to get through resistances, and ADD was making a move to the upside, at least at this point. Okay? So momentum was shifting. We didn't know if it was going to be forever, for a short period of time, whatever the case was. But we had things in our favor, leading us to believe that, hey, maybe there's an opportunity to scalp or make a little bit of money on some calls real quick. Well, all the things that I like to see to aggressively take a trade happened. Higher lows, we're coming up to resistance. We had broken the downtrend. I'm interested in taking this up to our next line of resistance. That's it. Now, the fact that we closed above that line during an uptrend, my belief is that we move up to the next line as a result. This happens to be my first trade of the day. Get in here for all the reasons I just mentioned. I get out here simply because we had already closed above this resistance, and I'm looking for the next line up at that point. That next line up is way too strong of a resistance for me to feel comfortable holding through. Okay? So I took my profits here. Now we pull back, we move up. At this point, Qs had already gotten through their resistance. And at this point, you're hoping all you can hope for is that they take out their high of day resistance. Because if they do, look at the size of the room between that resistance and the next one. It's a big move. That's one I would play 100% of the time. Since I was already out of the trade, and as sad as it is, that move to resistance on the Qs only brought you one level higher on our SPY chart. And that's probably because the Qs at this point haven't regained total control over SPY, and there was probably still some decent selling going in the small caps at the time. But that would have been my second exit suggestion because the Qs were hitting this line at 1030, which is right here on SPY. Okay. From here, we run up to our second target high. Congrats to anybody who bought calls because we closed above that resistance and ran up to the next line with a line-to-line trade. We rejected it pretty hard. Pulled back, lower high, expecting this support to fail. It failed, but not massively. Almost brought us right back down to that same support. But as we move back up, said to everybody, guys, it's proving to be a decent resistance. Qs, I think at the time at 1038, was back below resistance here. Let's give it a shot. We know it's a counter trend trade. What we're looking for is the move to come down to the first support we'd run into, which is down here. And we didn't make it there. Excuse me. We got close, bought at resistance. We moved down, didn't make it down. Our stop loss in this trade is a candle close above 531.05. And we are looking to stay below that line, still hoping to get down here. The problem is when we couldn't get down there, what is this? This is a higher low. This is normally where I would let you know, guys, this is a higher low. This typically doesn't bode well for puts. Higher lows are bad for puts. Lower highs are bad for calls. Okay? Some of us hung in there, and as we moved back down, we were struggling to move lower, and I told everybody, guys, we're on support that we just recently created. I don't think I want to risk this anymore coming off of a higher low. I'm going to go ahead and take myself out of this trade. Now that trade there yielded a 12.3% return, which wasn't terrible, but I am extremely glad we got out of it because look at what happened after. We moved up. Now, excuse me, I am so sorry. Upon getting out, I'm not interested in buying calls here because our next resistance is very close. So we have to look at the Qs. What are the Qs doing at 11 o'clock? Okay. Qs at 11:02 had just broken above their resistance here. Now we need them to get above this resistance here. They closed above this line at 459.96 at 11:02. Okay. And what were you expecting? The Qs to at least make it up to the next line up. Okay. So basically a 35-cent move, 45-cent move. We don't know. That's what we're trying to play. Well, you get in here at 11:02 or 3 if you're waiting for SPY to be above the line. And it hit the next resistance on Qs on the very next candle. Okay. Now, if you get in here, we have a stop loss, which you would want to make at 531.05. It's less than 20 cents away, and it's a proven level of support and resistance. So that would be your logical reasoning for taking yourself out of the trade. If we close below that, we have to believe it's going to come down to this support. If it gets below that, to this one, and from then down to this one. You don't want to hold through that stuff. Excuse me. I have a cough drop in and it's not helping. Guys, I'm going to pause the video for 1 second so I can clear my throat. Okay, sorry about that. Back to the less phlegmy me. However, what we were really hoping for was that the Qs could clear this double spot because then we have a nice gap between line A and line B. It's about a 60-cent move. Guys, if we could break above 460.56, I'd be interested in playing that up to 461.15. That happens right here on SPY with a nice clean run up. This is the third trade I took. So I took one down here, this counter trend trade here, and then this trade here. This one here happened to be a 46.1% win. And while we were hovering up here, I said, guys, I'd like to see us continue up. I'd like to see the Qs make it all the way up to that line, but I'm not sure that it's going to get there. I'm up a decent amount of money. I'm going to go ahead and take myself out of this trade. And that's exactly what I did. Okay. Now, hindsight, we pulled back, ended up making it to it later, but that didn't provide you much more of a win. that still brought you right back up to the original place where we took our profits in the first point. Okay. After that, Qs were at all-time highs, and at the time was 461.15. That's not all-time highs. It's intraday all-time highs, meaning we'd only been higher than this in a pre-market a couple of days back or a couple of weeks back, whatever it was, a week and a half ago. So it got to a point where I couldn't feel comfortable buying calls, not because I couldn't tell we were trending up or ADD was moving up, but because Qs were at all-time highs, and I don't have any legitimate targets high other than 461.51, which was the actual all-time high ever for Qs. So until we closed above this, I'd be waiting for that to happen. Now, we did close above it here at 1142, and SPY did break above their resistance here. But ADD, I think at the time, was not doing anything exciting. Let's see, 1142. Yeah, so ADD just pushed up, and ADD was moving not very aggressively at the time. I just have a hard time buying calls, guys, at all-time highs. It's a problem I have, and if you don't have that issue, I'm happy for you. That's awesome. I do, so you won't see any calls up here because I couldn't bring myself to take them between the Qs being at all-time highs, struggling to stay up there, struggling with this resistance here. Certainly wasn't interested in puts. We talked about that all day. Guys, you might not feel comfortable buying calls, but I certainly wouldn't be buying puts on a day like today. Okay, so we traded sideways, and then I decided to go to lunch somewhere around here. And after that, NVIDIA broke. We ended up running up to our next target high on SPY at 532.97. And yeah, we were waiting for, because we were talking about how this was a wedge right here, this move, we were wedging up, and I was telling everybody, yes, this typically breaks high, but you want to make sure the Qs are beyond any resistances before you take that, okay? So the Qs get to and through, finally, that line of resistance at 461.51, their all-time highs, and that's the last trade we talked about possibly taking, right? 250? 1250. Sorry. I mean, where am I at here? Where am I at? I'm thrown off on my time frames here. 1250, right? Now at 1250, SPY didn't have much room to go to their next resistance. So the Qs breaking that was a good thing. It continued to run up. I don't think, what did we do here? Why did we take this trade? Something was happening on the Qs, 229. Bear with me, guys. Sorry about the dogs. Oh, yeah, right here. This resistance was a nasty one. We had people wanting to buy puts. I'm like, guys, don't do puts. Please don't do puts. If you want to do anything, if you buy puts, buy them at the high of day and look for the support that we've created down here as your profit target. I wasn't going to recommend it, but I had people dying to play puts, telling them, guys, if we close above 462.21, this thing might take off to the upside, but we don't know where it's going to go because we don't have any lines up there, okay? So at exactly 229, we closed above that level of resistance. And we held it as support. So guys, this is a better time as any to play calls. It's a late day trade. This is not my jam, but as long as we stay above that 462.20 area, I expect us to keep moving up. That happened here, okay? 220, that happened on the Qs. We cleared resistance on SPY. Everything was a go. Up we go. And we made it to our futures line. Then we started to flatten out again. Guys, I don't like trading this late in the day. There's no telling what's going to happen. And so this was it. We were talking about a bunch of other things at this point, like high yield dividends and all that stuff. But late in the day, all-time highs, this is a very difficult time for me. And quite honestly, I hope we drop overnight a little bit just so I have usable levels to the upside so I can do my charting in the morning with some kind of reference. Not because I want the market to crash or any of that stuff. I want to not open at all-time highs tomorrow. And that's just me. But that's pretty much it, guys. If you found any useful information in this video, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, we'd love to have you. There's a link down below for it. Use the free week. You might like what you get for the free week. You might learn all you need to know in the free week. I don't know, but I hope you learned something. If you like what you get for that free week and you want to stick around with the same access and more, consider becoming a paying member. We'd love to have you. And with that, we're going to wrap it up. Hope you all had a fantastic day today. Till tomorrow, I love you guys. See you.